Good afternoon, friends. My name is Rob Galetko, and I'm the Director of Business here at the Mount Lebanon School District. I'm here today to talk about the results of the 2021-2022 financial statement audit and how it will impact future budgets. The past fiscal year has seen the district's commitment to academic excellence by investing in infrastructure, technology, textbooks, and mitigation efforts to ensure a safe and award-winning education. This financial plan aligns with the district's strategic plan and contributes to the success of our students by providing the best education possible for each and every student. This audit is clean, with no findings and free from any material misstatements. Furthermore, we were offered an unqualified opinion from the auditors, meaning our statements are fairly and appropriately presented. After its approval by the Board of School Directors, these financial statements will appear on the district website as part of our annual comprehensive financial report. I want to thank our business office staff, administration team, budget managers, department chairs, and our school board for supporting our efforts to appropriately and accurately present our financial outcomes. This slide details the revenues and expenditures that had a notable impact on the final audited figures. As you can see on the left, we had some significant real estate tax revenues in the last fiscal year, particularly for the Galleria and the AMF bowling alley at the bottom of Washington Road. We saw a recovery of real estate transfer tax and delinquent tax. We saw an extended recovery in earned income tax. We saw a significant amount of gate receipts. We saw state grants for safety and security, and we had some unplanned for federal grants from FEMA, from ECF, from IDEA, and some ESSER extra pass-through monies that were federal monies passed through the state. On the expenditure side, we continue to have federal expenditures related to COVID mitigation. As I described from FEMA, we did receive those reimbursements for PPE, filters, and we did incur some extra expenditures for utilities by letting in 30% outside air to mitigate COVID-19 spread. We did receive a technology grant of $779,000, so we did not expect those monies on income and also didn't expect them on the expenditure side, so we will be overspent in some of those categories. Additionally, we saw additional costs for substitutes, charter school tuition, outside placement tuition, transportation of those outside placements, and a significant transfer by the board to capital reserve. So from a 30,000-foot view, this computation shows our budget to actual results at the highest level. The budget began with an allocated use of $1.5 million in fund balance as the board's first recovery budget response to the COVID-19 pandemic's $0 mil increase in the 2020-2021 fiscal year. This ensured the district kept its award-winning level of programming and services while also not overburdening the taxpayers of the community by not raising millage to the Act 1 index. This fiscal year saw local revenue recovery, state and federal grants, and a reallocation of resources to meet the technology needs, grant requirements, substitute shortages, and mitigation efforts of the district to ensure the continuity of education this past school year. On a function revenue level, all of our local and federal revenue categories show a significant overcollection, while state revenue was held harmless. Revenues exceeded the anticipated budget by just over $3 million, or 2.95%. All ESSER money planned for came in as expected. The additional federal funds were not a windfall, as we had to spend down the monies according to the statutes. As a whole, our revenues have rebounded nicely since the 2020-2021 fiscal year. To focus on the major recovery categories, this slide delineates the major recovery in the post-COVID era. As you can see, our earned income tax rebounded nicely, actually up close to $1 million. Delinquent real estate tax up $272,000. Real estate transfer tax up $256,000. Gate receipts. In previous years, we only recorded athletic gate receipts in the general fund, and a lot of our fine arts and other activities were recorded through the Student Activity Fund. Some accounting standards changed how we accounted for those things, and all those gate receipts needed to be brought to the general fund, where we pay the salaries for those positions. So you can see a significant over collection there. It also helps when your high school football team and women's basketball team make it to the state final, and people are interested in going to those games. On the federal side, we saw an additional $185,000 in IDEA pass-through funds from the AIU. We saw our FEMA reimbursement of $479,000. Again, that was for PPE, disinfectant, plexiglass, a number of things that were not covered by other grants that we had got. The ECF connectivity grant was a grant that was passed through from the FCC and allowed us to start our one-to-one Chromebook initiative and provide some MiFis for our most needy families. And then finally, some more state pass-through ESSER money as extra, just over $131,000. So the story of last year's financial results are one-time federal funding. We got some major help from the federal government over the last 2 years. 2021, 2022 saw planned for federal assistance as well as unplanned for federal grants that required us to incur additional expenditures outside the scope of the original budget. Our ESSER 2 and ESSER 3 monies were planned for and expended under the parameters required by the U.S. Department of Education and Pennsylvania Department of Education. Our ESSER extra funds were allocated after our budget was approved as a pass-through from the Commonwealth. Our additional IDA funds were passed through the AIU and used for reimbursement of additional special education teachers. The receipt of our ECF grant was an effort by our IT department that saw us obtain the Chromebooks needed to implement our one-to-one initiative and provide wireless hotspots to our most needy families. Our FEMA reimbursement was a culmination of efforts by our facilities, nursing, and business departments. This reimbursement was for PPE, barriers, signage, disinfectant, wipes, and air filters that were not covered by any other federal funding dating back to March of 2020. Of note, the district has spent over $2 million of both local and federal funds to help mitigate the spread of COVID-19 since 2020. Future budgets do not project receipt of any of these funds. These are one-time funding sources that were geared toward the economic recovery of the country, as well as the mitigation efforts and learning loss brought on by the pandemic. This slide details our expenditures on an object level. As you can see, we overspent our expenditure budget by $2.7 million in total. This overspending is tied to required grant expenditures, charter school and outside placement tuition, as well as the transportation of those students. Specifically, salaries finished within 0.04% of the budget, even with the additional substitute costs, overtime, and turnover we incurred. Benefits finished under budget for 2 reasons: significant underspending of health insurance costs because of retirements, and $100,000 savings in workers' compensation premiums. Contracted service finished over budget for a few reasons, most tied to our special education students and their required services both through the AIU and contracted support services. We continue to see a significant increase in identified students and their legally required services. Repairs and maintenance came in close to budget, however exceeded based on an air conditioning fix at the Washington Elementary School that was eventually reimbursed by our insurance carrier. Charter school tuition, special education outside placement tuition, and the transportation of those students contributed to the overspending in this category. Like contracted service, we continue to see an increase of identified students and their need for placement in these specialized facilities. The supply overspending was tied to 3 things in particular: the receipt of $800,000 in grant monies for Chromebooks, COVID medication supplies, and utilities increased due to the district using the 30% outside air in the HVAC system in order to mitigate the spread of COVID-19. The equipment category there was underspent. We did incur some additional fees based on our outside collection of delinquent real estate tax. However, this was covered by an increased revenues in that line item. Lastly, our transfer to capital reserve in February. These monies were sequestered in the fund balance and transferred to address the items in the 5-year capital improvement plan. The overspending in the contracted services, tuition, supply items are a direct result of the district's commitment to continuity of education. Chromebooks, PPE, HVAC filters, plexiglass dividers, learning management systems, softwares, and a significant increase in charter school enrollments contribute to some of this overspending. Again, grant funds, COVID relief funds were all a significant piece of the expenditures this year. That said, this chart details the expenditures that were not budgeted for in fiscal 2022. These expenditures helped us remediate students, keep our students and staff safe, launch our one-to-one device initiative, and educate and transport our special education pupils. This list totals over $2.1 million in unplanned expenditures. So after those revenues and expenditures, we concentrate on the fund balance. Our fund balance decline over the last few years has been expected and planned for. This reduction of fund balance over the last few years is a result of our investment in infrastructure, technology, textbooks, and the board's willingness to give taxpayer relief. As discussed since the inception of the pandemic, it will take 3 to 5 years to recover from the fallout from the pandemic and build our revenues back to achieve structural balance. Fiscal year ending 2022 was only year 2 of the continued recovery efforts. The discussion on fund balance levels, capital investments, and board initiatives will continue when we open the budget discussions in January of 23 for the 23-24 school year. As you can see, the 6/30/19 year ending with a $14.5 million fund balance, and then being drawn down upon in the 20 year, 21 year, and 22 year, both through not increasing taxes to the index or at all, and continuing our investment in capital projects. We will again keep the community and the board abreast to how those things will change in adjustments and recommendations for those as we continue in the 23-24 budget process. So here's a 10-year history of our fund balance. As you can see, over the last 10 years, those monies have stayed relatively steady. In the 17, 18, 19 years, we saw some windfalls from the refinancing of some bonds tied to the high school projects, and typical overspending or over collecting and underspending that were a long-standing tradition of this district. So our board has a long history of investing in our infrastructure, technology, and textbooks. Since my tenure here began in the fall of 2018, our boards have invested over $2.3 million in the categories listed above, without taxing our community nor issuing any type of debt. These monies were accumulated over time through underspending, overcollecting, and refinancing old bond issues when conditions were favorable. These projects hold the millage equivalency of 3.83 mils. Our board's commitment to world-class education, along with world-class facilities, is evidenced by these investments. So just some reminders to the board and public about where this year's budget stands, the current 22-23 school year that we were in. Still out of balance by $850,000. The board did vote to draw down again on fund balance without raising taxes to the limit to ensure that all our services and programming stayed intact in the district. So along with the out of balance figure that we discussed in the previous slide, we are seeing some fixes and some additions from that. After the district approved its budget in May, the state subsequently passed their budget in late June. These estimates factor in the estimates from those legislative actions. Additionally, we are seeing favorable trends in regards to earned income tax and interest income. We will continue to monitor these as the months progress. On the expenditure side, everything is currently trending appropriately. So we're very thankful from these windfalls that we received as part of the state budget, And we are very thankful that our interest income has returned to pre-pandemic levels and that our earned income tax continues to increase as salaries increase. As I stated earlier, this chart kind of visualizes the reduction in the use of fund balance and the incremental tax increases that the board discussed to achieve structural balance over the 5 years since the pandemic hit. So going back to the 2021 school year, the year with a zero mill tax increase, the budget was out of balance, about almost $2.8 million. As you can see, the resulted use was less than anticipated by about $42,000. 21-22, which we are talking about here, we were projecting a loss of $1.5 million that year. That loss came in less, $441,000 to the good. That loss does include our $850,000 transfer to capital reserve, again, to continue our investment in infrastructure, technology, and textbooks. Our initial 5-year projection for the recovery from the zero bill base budget year was for the board to anticipate to use another $1 million in fund balance to balance the budget in 22-23. Those monies came in a little more favorable this year. Again, the 22-23 budget calls for $850,000 in fund balance use and a $150,000 improvement over our initial projections in the spring of 2020. Also, this dovetails into the previous slide where we saw some of those windfalls from the state and from our investment income and earned income tax. So as we continue through the chart, 23 and beyond, our initial estimate was for $750,000 in fund balance to be used to balance the budget in 23-24. Those estimates have been revised to $500,000. So we are $250,000 to the good there. The 24-25 school year, those initial projections called for about $500,000 worth of fund balance in those years to be used to balance the budget. Those again are coming in about $250,000 ahead of schedule. And into 25-26 school year, we were initially estimating $250,000 in fund balance used to balance the budget. We're now projecting zero. Obviously, those projections change once 1 month close, once an update at the Federal Reserve happens, those estimates change. However, today they are looking favorable should the board continue its strategy of the use of incremental tax increases and the reduction in use of fund balance. Again, all those items will be discussed in the 23-24 budget process, and the board will make decisions based on projections and data that we receive closer to March and April of 2023. So here's an early look at the 2023-2024 Act 1 Index. This is the information that we have to work off of as of today. Again, much more information will come out starting in January when we begin our budget hearings and discussing these in front of the public. But the index is 4.8% next year. That's the highest it's been in many, many years. When I got here, it was about 1.4%. So that would allow the board to raise taxes a significant amount, 1.2667 mils, or the dollar equivalent of $3.5 million. The assessed value, it continues to be a point of contention with Allegheny County under the current court case involving the common level ratio. So we will keep the board and public abreast to any information we have regarding that. So that kind of falls into my final slide in the big preview for the 23-24 budget issues. Obviously, we're all feeling this at home, at the gas tank, at the grocery store. Inflation has made its way to school districts as well. As I mentioned in the previous slide, the common level ratio case that's at the county right now could have a significant impact on assessed values and our STEB market value for real estate going forward. Some other things on the horizon, our teacher's contract does expire June 30th of 2023. Those negotiations will begin in January. Preliminary healthcare projections are extremely high at this point. Again, the inflation bug has seemed to have bitten everyone. They're projecting between 12% and 18% increase in healthcare costs. Our supply budgets, depending on what we're looking for, items have increased anywhere from 10 to 20%. We continue to use our one-to-one initiative in different forms and fashions. We have a learning management software now, and now we're beginning to retool our curriculum and books into more of educational softwares that align with our current model. So that will be a discussion this spring. Again, the special education transportation to outside placements, and the tuition that goes along with that. And the board obviously each spring in February discusses future capital project needs and how to fund them. And then also any of the board's initiatives and goals they have for Dr. Steinhauer currently with diversity, equity, inclusion, and some sustainability efforts that we're trying to make on our end in regards to vehicles and roofs and that such will be topics to discuss as we try to put together a budget for the 23-24 school year. So if anyone will have any questions, please feel free to reach out to my office. All my information is available on our webpage. This presentation will appear on the website and on our My Lebo YouTube channel, and our actual financial statements from our auditor, Zellenkoff Axelrod, will appear on the district website, as long as, and additionally will be included in the annual comprehensive financial report that we will submit to the Association of School Business Internationals to hopefully receive our award for excellence in financial reporting for the 38th consecutive year. So thanks everybody for tuning in today, and we'll talk to you soon. Thanks.